to trade. This is an E-mini trade along. Saul will be joining us shortly. Saul's a 25-year veteran of the trading pits in Chicago. We're doing this live in Zoom. You can find us at eminitradealong.com, eminitradealong.com. If you're a new trader, we can help you get set off on the right foot. We can help you get set up with a trading platform. We can help you learn how to trade. We can help you take the steps it takes to learn how to become a consistently profitable trader. This is an educational only service. Everything we hear is not to be taken as trading or investment advice. It's an educational only service. We're going to be getting set up for the morning session here, which starts in about 10 minutes at 9:30, the opening bell, Eastern Time out of New York. If you need trading software or get set up with trading software, let us know. If you'd like to change, let us know. There's a menu plan of offerings, which I'm going to post. I'm posting these in Zoom, and that's the eminitradealong.com link. Pops you right into Zoom. Check your email for your registration link to come in. I'm going to pop this in. Welcome aboard. Thank you. Thanks for being here, and you may thank us for being here. Here's a laundry list of things that we offer. Starts out with a subscription to this service, which we have guests coming in, so welcome guests. If you have some time to come in and check out our service, be part of it, ask questions, kick the tires. If you like what we're doing here, tell your friends. Again, it's eminitradealong.com. First one is subscription access. The second one is private coaching sessions. Saul's a 25-year veteran of the trading pits in Chicago. He's actively scalping for his own trading account. He is set up, as you see, with Trade Navigator. That's his platform. He's actively scalping, working his trades. Then you have the opportunity to have a funded trading account. That's for traders that are interested in trading somebody else's money. It's through Top Step. There's a link there for you to read. Click on it, read through it. We also have access to a trading platform for you, which is Trade Navigator. Platform and charts, there's a link there. Click it, read it. A lot that goes on here. The focus here is trading. We're looking to do 2, 3, 4, 5 trades this morning during the morning session. We open up at 9:15 here. Right now it's 9:22 on June 2nd, 2023. And again, everything we do is for educational purposes only, nothing taken as direct trading or investment advice. Part of the opportunity of being here is not only to work with Saul as your trade along partner, which is phenomenal in my humble opinion, but he also gives out a series of levels as a roadmap for this morning's session, where it really helps you focus on what? Hold on one second. Help you focus on what? Help you focus on those areas. So he gives you out various levels in the S&P 500 E-mini. Prices. One is called a pivot. It goes in the middle. On top and bottom, he has what he calls support and resistance. The support and resistance can be 5 levels on the top, maybe 6 or 7, depending on the action of price. And then below as support, 5 or 6 or 7 on the bottom. He makes adjustments on the fly based on activity and price movement of the S&P 500 E-mini. When he pops in, he's going to address his charts. He's going to pick up the mic. He's going to take over this morning's session. Don't hesitate to ask questions, interact. Don't hesitate to write down his levels. Saul has a technique of loading his levels into his order entry. So this service is for individuals that have a trading technique or are looking for a trading technique. Price action trading has been around for a long time. My humble opinion is tried and true. It's the fundamental basic of trading, where you're not concerned about all sorts of things happening in the market on your screens, indicators, crosses, time frames, flashing lights, the things that drive individuals based on, it's not your fault, it's not anybody's fault. It's the nature of the beast, the trading platform, the charting systems, the action that happens based on all the other traders out there that are doing the same thing you are. Think about that. You've got a bunch of people going to their screens this morning, waiting for this 9:30 bell in 5 minutes, and they are all pumped up, ready to trade based on what their technology is telling them. Now think about that. You've got a series of you're pretty powerful technology, right? You're also trying to mentalize on it to make it your own so you can beat the other person out there that's starting to trade at 9:30. What is the difference here, you ask? Is that Sol's different because he's been trading for 25 years and knows a thing or two. He's actively scalping, so he's at risk, depending on the trades that he looks to do. And when he sets out his roadmap, the pivot and other levels on top and bottom of that pivot, the levels and zones for this morning's session, he's laying out a roadmap for himself that he's looking to count on that gives him, in my humble opinion, and I would say his, an advantage over other traders because he has a roadmap. Now you may question whether the roadmap's any good. It's a very good question. The roadmap itself is a roadmap. You can witness how the market price change as it interacts in and around those levels, if they're valid or not. You'll be able to pick up on that pretty quickly. You'll be able to pick up on that pretty quickly on your own. Who do we have here ringing the bell? Let's see, is it Don? Yes, it is. Don is in the house. I want to pin him, and I want to make him a co-host. He has been with Sol for a long time. It's a good egg. He is a trader. He was a trader before he met Sol. He's a trader after. If you'd ask him, I think you would say that he thinks he's a much better trader after he met Sol. And he also likes the idea of trading along with Sol, interacting with him during the morning session, and he believes it helps him based on his trade. And we appreciate him being here. If you're coming in from elsewhere, eminitradealong.com. eminitradealong.com is where we're at in Zoom. Should see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. Again, we're looking to do 2, 3, 4, 5 trades. Price action trading technique that can be taught to you. If you need a trading, what do you call it, a tweak in your trading, ask Sol and he can set you up in a private session, have a coaching session with him. He can either teach you from where you are to where you'd like to be and tweaking what you're doing, or help you develop a price action trading strategy so that you can utilize on your own. When you go into a coaching session with Sol, you get coached. It's a dialogue between you and he in a Zoom classroom where you have live charts and the ability to interact with him with a headset. Then you come in here as a proving ground and an access point to him during the live market.
All right, good morning, everybody. Can everybody hear me all right? Let's give you our levels for this morning. Unemployment morning. You can see how it got a little volatile there for a little bit, but we're up here on these interim all-time highs. Not all-time highs, but our pivot this morning is 42.53, 42.53. resistance above at 64, 74, 85, 92, 43.01. Support below at 44, 35, 28, 20, and 11. Our pivot, 42.53. Support, 44, 35, 28, 20, 11. The resistance on the upside at 64, 74, 85, 92, and 43.01. All right. Unemployment number was released this morning, and another blowout number as the market upticks here a little bit. We've got a little resistance around the 64 area. Remember, we haven't been up here for a while, so whatever happens, you got to make sure you keep your stops in place. And that way we don't get ourselves in any kind of trouble, especially considering we are trading off of this unemployment number that's was released this morning, which again was very positive here. So we're coming quickly upticking here just a touch. We're looking at the 64 area a little bit. Let's see here. All right, we're coming up, continue to uptick. We're looking at the 63 area. I got a little bit uptick in volatility, not too much, just because we're rallying. So again, be mindful of that and keep your stops in place, and also adjust accordingly with your number of contracts that you're trading to take into consideration that added volatility with the release of the unemployment number and the market's reaction to it. So, there's times when you can go full strength, and other times where you have to understand the volatility that's in the market, and then trade that accordingly as well. So there's different ways of managing risk, like I always keep saying, and that's definitely one of them. We're coming up here to our 64 area. We are scalping the market using the levels we gave out, and we'll repeat the levels here in a little bit in the chat. In addition to the levels, we have price action opportunities that might occur once the market paints some bars. We're trying to scalp the market here for about 2 to 3 points, which we got our quick, which we got a quick 2-point rotation here off of the 64 area with no heat whatsoever. So if you had 64 against the resistance and we're shorting it there, and you had a nice rotation here against the 64 coming down to 62, you got filled. Again, we're scalping the market, so we're not trying to hit any home runs here, at least depending on how you manage those trades once again, and also depending on how market reacts against an area or a level. All of those have to be taken into consideration when you're trading, and the market. We're not trying to guess which way markets are going. It's not our deal here. Again, we'll talk about the release of the numbers and what obviously they're having a positive effect on the market as we continue to rally here a bit. If you look at the chat, you'll see the levels that we just gave out. Again, those are used to guide us through the day as to where some areas that we'd be focused in on to be able to, try to scalp those areas if we can, if the market gives us those opportunities. So again, we're trying to scalp using take advantage of ebbs and flows of the market. We don't believe markets go straight up or straight down. Consequently, we're trying to look for those opportunities to scalp the market and take advantage of the ebbs and flows. And finding support and resistance areas, at least that's one way of doing it. There's other ways, obviously. There's multiple ways of trading. It's the beauty of the game. So we came against our 64 area there, had a nice quick rotation. It's a good way to start the Friday. The Strength of the labor market has, for the most part, been a surprise to the upside, so the economy rebounded from its pandemic shock of April of 2020. While that may be good news for workers, it's not good news for the Fed or what the Fed wants. Jeremy Powell has emphasized that the labor market remains unsustainably tight and supply and demand needs to get better for inflation to retreat towards the Fed's 2% goal. As the market continues to uptick here, we're looking at the 64 area next. Some recent data has pointed to continued robust labor markets. The JOLTS report on Wednesday, unexpectedly large increase in jobs. Thursday's ADP number also came in stronger than expected. And today's figure they were expecting 180,000, and that obviously came in a lot better. It got in there at exactly at 300. Right. Let me find it. 339. So a big miss here, and I think they revised last month up. Last month was a 253, right? And they revised it up to 294. So very robust economy as far as the jobs numbers are concerned. And well, finally, good news in the market. But look at it, bond market too. Bond market is up. That doesn't make any sense, right? These days it makes sense. Well, actually, it's not up. Technically, it's not up, but from where it started this morning, it's up. Okay, it's still down a few ticks on the day, but overall, it's still up. The yield on the 10-year right now is trading as the market continues to uptick. We're looking at the 74 area next as some resistance as I blab along here. Pretty amazing, nice little rally yesterday. Again, we talked about yesterday afternoon, the market can get one-way trade, especially since there might be a leak on the number. Shh, I never said that. I guess somebody knew what was going on yesterday, right? If they continue to uptick here a little bit. Yield on the 10-year is at 362, and they were pushing close to 4% not too long ago. So they've made a nice little recovery here. Kind of interesting considering what the Fed might be doing or not doing. So we always, again, you have to be careful of that day before unemployment or any, Fed day kind of stuff where they kind of sneak some information to some traders. Nobody said that. I'm just joking. Okay, so we're continuing to uptick here, looking at the 74 area next. Again, all we're trying to do is take advantage of ebbs and flows. If you wanted to, if there was a buying opportunity, it could have been above the above that spike there if you wanted to get long. But we were able to scalp it against the 64 area, and now the market continues to keep some strength here. We're looking at 74. Again, if anybody has any questions, feel free to ask in the chat. So big blowout number. April's number was also revised up. So all these numbers are very good, even if today's the job figure shows stronger than expected gains, which is happening nearly every month over the past year. It may not matter unless the numbers really blow it out of the water, as mentioned previously in this article. Fed officials are calling for a pause in the interest rate hiking cycle this month before making a further decision on the extended additional policy firming. Odds of pausing have also skyrocketed in the CME FedWatch. Went climbing to nearly 80% yesterday from only 35% a week ago. That is for a pause. Okay, so it seems like they're going to maybe slow down a little bit. I don't know. That was the skip. That was the thing that I read yesterday about the skip month or something, or a skip meeting, whatever it was. All right, so we're continuing to uptick here a little bit, looking at the 74. Do we know we're going to get up there? We don't. We feel like that's a good area that we might have some resistance, and then maybe take an opportunity to scalp against it, just like we did with the 74. Did I know it was going to continue to rally? Nope. Did I know yesterday you could have bought it at 42 even and continue to rally? Nope. So if I did and I didn't tell you, that'd be really bad. And if you did, if you knew and you didn't tell me, that'd be even worse. Anyway, so you get my drift here. We just never know what's going to happen. All right, so jobs numbers continue to surprise everybody, and I guess this little rally here is maybe a continuation. That last night the Senate passed the debt ceiling package by a vote of 62 to 36, sending legislation to the president's desk to stave off a catastrophic default. They do this every time. It's just stupid and dumb and disgusting that they keep doing the same thing over and over again. Kind of stupid. It's really stupid. The rhetoric that comes out of Washington these days is even stupider. Stupider. Oh, nice continuer. We got a little. We're looking at the 74 here. I don't know if we're going to get there or not, but that's the next area that going to have a little bit of resistance up here if we get up there. The bills, in exchange for some measures, the cap non-defense discretionary spending, stiffened work requirements for some recipients of food assistance, and allowed the Mountain Valley natural gas pipeline. As the market stays strong here, no one gets everything they want in negotiations, but make no mistake, that this bipartisan agreement is a big win for our country and the American people. President Biden said in a tweet, "Our work is far from finished, but I look forward to signing the bill into law as soon as possible and addressing the American people directly tomorrow." So he's going to be chit-chatting away maybe at some point, so be careful about that too. All right, market staying up. We got up to 72 here. We got 74 area next. There's a little area that I may be focused in on. Pretty strong little market here, right? On top of yesterday's a nice little rally. Okay, coming up here to the 74 area. Little resistance right up here. All right, coming up here to the 74 area now. See what it wants to do up here. Again, whatever you do, make sure you keep your stop in place because, you know, we just never know when these things are going to continue or hit some stops or anything. Just never know. So we're not going to guess. We're just going to keep our stops in place and try to take advantage of those ebbs and flows. If the market is nice enough to give it to us, like it did on the 64 area here. Again, we're scaling into the 74, so you know we're not going to be perfect. I'd like to be, but it's not going to always happen. Not like the 64 got up to 64 and a quarter, and then boom, and now we're coming up here. See what it wants to do. See where it's got up here to 375. Okay, we have no other numbers coming out this morning. So we're just trading off of this unemployment thing, which is also a big thing. And now remember, you do get some trade in the morning with unemployment, and they usually kind of call it quits in the afternoon with these markets, the way these things are trading. So be mindful of that. We also, for those of you who are new here, we are also focused on the morning hours to give us our opportunities to trade. And uh, we feel the dynamics for what we do and how our methodology works well in the morning, as we're getting a nice rotation here against our 74 area. All right, so nice little rotation here, and this is the one maybe if you want to try to stay a little bit short here, have a trailing stop, see what happens. But take your profits along the way if you're trading multiple contracts. I would, yeah, I agree with you, Don. But a nice rotation there against our 74 area. Again, we're not going to be perfect. You have to scale in. And there are different ways of scaling in. Some people scale in a point above and below. Some people scale in half a point above and below. If you had 74, obviously you didn't get filled because it got up to 375. But hopefully, you know, these levels that we give out are areas that we're focused in on, and different people scaling differently to take advantage of those situations. And we got a nice rotation here against the 74 area again. I would like to stay a little bit short here if I could. I wouldn't mind covering them down here at the 65, 67 area, right there, something like that. And there's a little volume uptick here at 68, by the way, in case you were wondering. But if it gets through 68, we should get down at 65. We'll see. But a nice rotation here against the 74 area. So again, if anybody is interested in what we do, how we do things here, please feel free to ask any questions. If you want to, we do have coaching classes as to how you figure these levels out and how you manage them as far as getting in, getting out, and trading them. So all this stuff is part of our coaching course, is the class that we offer. So again, the unemployment number has created a nice little push up here. All right, there's a nice little rotation there against the 74 area. Again, like I said, that would have been nice if you could have stayed a little bit short there. I thought that maybe that 74 would give us a little bit of a nice push down. This is another way of taking a little bit more than 2 or 3 points off your trades. You know, being able to get into an area and then uh, exit some profits and then hold on and see if we can get a nice little rotation here off of it. And we got lucky there. And we had a nice little rotation here off of it. So that is what we try to do here. We're trying to scalp against levels, and like I said earlier, you know, if we get in at a nice level and you can manage it, you can definitely take more than 2 or 3 points out of a trade. This 74 area here was a perfect example. You know, obviously we didn't get to 74, but like I said, we got up to 375. But it's the area that we're trading. It's not the perfect number because nobody. The market. If you don't, you probably will miss the trade. Sometimes it could run us over, no doubt. You know, no doubt that it can do that, but that's the risk that we take. After all, we are trading futures. There is inherent risk in what we are doing, but we also have to learn to manage it, which is what we talk about all the time. All right, so there's no other numbers coming out this morning. Obviously, we don't really need another number to come out, but the unemployment number was a big number. Now we'll see how it affects everything else. Obviously, the bond market is recovered because they got spanked yesterday, and they've come back a long way from the lows today already. So that's good. I mean, again, I don't understand how that works because bonds going up means interest rates are coming down. Yeah, I don't know where, how, when, what. I don't know. It's kind of hard to figure out what the Fed's going to do next. I don't even know what the Fed knows what it's going to do next. I don't think the market knows what the Fed's going to do next. All right, good job there, Philip. Nice, very nice. That could be a day. It could be it for you. Right, nothing wrong with that. Take a nice little profit there and have a nice weekend. All right, that's especially on a Friday. You can make money on a Friday. Whew. It is. That is it. Nothing like making money on a Friday and enjoying the weekend. Nothing worse than losing money on a Friday and thinking about it forever until you start trading again. Been there, done that. Been there, done that. So, good thing to make a little bit of money on a Friday and say thank you and say see ya. Bonds are crazy. It is again a little. You know what? I'm not trying to figure out what to do with bonds. They are just. It is what it is, and that's why we don't trade them. They're just. I used to love trade. I mean, I traded in the bond pit, so I used to trade well. Right now, we've got support at the 55 area. In case you are wondering, if you are looking for a place to buy it, don't forget today is National Donut Day. That's right. You can go to Krispy Kreme, they'll give you a free donut. Who doesn't like a donut? So, in case you're wondering, I know they sell a lot of donuts down in Texas. That's for sure. Brad, you can't have any donuts. They're not good for your ticker. Unless you can sneak one from the wife, then it's okay. What a deal. Get free donuts today. You don't even get them. You don't even get a free donut at Dunkin' Donuts. Of all places, you have to buy a coffee or a drink there. That's what I heard this morning. Trust me, I didn't even notice. I just listened to it on the radio this morning, the news, and that's what I heard this morning. That's why I knew all this stuff. But hey, all right. We are kind of just hanging here in this little range. That's true, Pat. But I just focused on the good, like I love Margarita Day, right? Pancake Day. There's some other good ones. Taco Day. But yes, there's some people that's what they do. There it is, Don, giving us our recap of the day. You can see there our 64 and our 74 worked very nicely. If anybody has any questions, feel free to ask in the chat. We don't mind questions. Again, we talk about the managing risk and how you can handle a risk or dealing with risk when it comes to trading. That's not a perfect scenario all the time. Every day is different. The amazing thing about trading is that every day has its own set of dynamics. You know, there's news that comes out. There isn't news that comes out. It's slow. It's fast. It's crazy, and you just don't know how the market reacts to it. You got people talking. So you got unemployment. You got the Fed. There's so many. I look at this as a big equation, right? You got A plus B plus C. All these things come into it, and you get equal the price that we're trading. Sometimes those different parts of that equation kind of get skewed. They kind of get you know they're tripped up. You're expecting to be a positive number, it's a negative number. Somebody says boo in this instead of saying boo, stuff like that, and all of a sudden you get some market rotation and changes the outcome of that, the result from that equation that you're looking at. All right, market here kind of hanging in there. Maybe a little bit of a sale there below the 60, going down to 55. We still got a little support around the 55 area. If we get down there. Again, like I said, a little bit of a sale there below the 50, below the 60 here. Again, we're getting this follow through here today because of the volume and volatility. So you can sometimes take these price action trades. Again, there was a little sale there. I said below the 60 area, pushing us down here to the 55, which I think would be some support. So again, if you were trading, this is where you want to cover them. And if you were wanting to get long, this is the area that if you're thinking of getting long, this is where you maybe think about it. At least there's some decent support here. Again, these are price action trades that we can focus in on or find. And any of these trades that I talk about are taught in our coaching classes if you are interested. Coming down here to a little support area. If you got short there at 60, had a nice quick run here. So can't complain about this little quick run here from the 60 with very little, no heat whatsoever if you sold it through. So nice little quick opportunity there. If you did, cover them right in here. So nice little trade if you did jump in. And the goal here of our coaching classes is for you actually to be able to find these trades on your own and not independent of myself, because there's no reason for me to be around all the time. I mean, I am around all the time, but sometimes not. And the goal is for you to do this on your own, right? Find these trades on your own. All right. Again, you also have to understand the volatility. Sometimes, you get some uh, trade that doesn't give us the follow through, but because it's unemployment and because it's Friday and there's a little volatility in the market, you're getting the follow through on some of these price action trades. Again, if you don't like the price action, if you're long and you bought it and you don't like the price action, it gave you a chance there to exit the trade. As the market is a little bit of pressure here coming down here to our pivot area. If we cut through that, we're looking down at 44 next. Again, if you did buy them down there and you don't like the price action, you're definitely given a choice to get out of the trade for you had a chance to scratch it before, and or if you did get short against the 60, cover them. And I'm giving you all these options because they are options. It's like, and everybody could have maybe taken one part of the trade and not the other, because nobody here has to trade the same thing or the same way. You have to understand what works for you, and then go from there.